Welcome to Secure Money Mindset, the ultimate podcast for financial planning tips and strategies. Our episodes are designed to be concise and to the point, lasting no more than 30 minutes. Each episode features seasoned advisors from Secure Planning Group or an outside financial specialist discussing crucial issues and providing actions to consider when addressing your top financial concerns. We value honesty and transparency, meaning we present both the good and the bad news in a clear and concise manner. Our goal is to provide you with reliable insights and practical guidance. Be sure to hit the follow button to stay up to date with our latest episodes. For more information, please visit our website at securepg.net. Let's dive into this week's episode of Secure Money Mindset.
Hey everybody, and welcome back to the Secure Money Mindset podcast. I'm your host, Mike Lenge, and today we're here with the Managing Director, John Simone, and we're here to talk to you a little bit about succession planning for financial advisors and why it's important to partner with a team like ours. So kind of jumping right into it, John, if you don't mind, we wanted to just talk about how you view the different life cycles for a typical financial advisory practice.
Sure. So I would say, just from my 28 years of experience and working at a couple different firms in different sizes, there tends to be really three different phases an advisor goes through. I would say 0 to 10 years. Revenues could be anywhere from 0 to just starting in the business to maybe almost 400,000 or 500,000 in overall revenue, not counting expenses. That phase right there, you tend to see an advisor who is really focused in on micromanaging everything. It's them doing the administrative work, it's them doing the calls, it's them doing the follow-ups, it's also them doing the marketing, the paperwork, everything. I can know that from my experience in the business. They tend more to focus in, give me the highest type of payout and the least amount of expenses, and that's how they're running their business initially. As they grow, they don't necessarily hit that growth phase until they start having what you call, or what I like to call, a little bit of pain. And that pain is that they're not going out and seeing enough people. They're spending more and more time dealing with client, administrative tasks. Maybe they're losing a couple of clients just because of scale size, and they're spending way too much time in the day. What we say is not the money-making time. Then you get into the second phase of an advisor life cycle, and I would say that's kind of roughly in that roughly 10 years to 20 years, and could be between the 400,000 or 500,000 in overall revenue to upwards of 750 range. In that sense, you start realizing that the scale, you start feeling the pain, and in order for you to grow, you need to either hire support staff, you either need to bring on a junior advisor to allow you to focus in on what some of your higher level type of clients, and you don't want to give up those, I would say, the younger clients or the smaller account clients, but they still tend to take a little bit of time, and our focus in that, we'll touch on a little bit later how we help each of these phases. But in this situation, we see that they also run into a scale issue. The issue then becomes, how many staff do you end up hiring? Then it's, if you don't have enough staff, then how is your business actually growing? They get to the point where they're also trying to either run their business as like a cash flow. They start making enough money, and they start seeing how business expenses are, and whether or not that they actually think more about growth than they do just running their business as a cash flow model. The third phase is more for, I would say, that advisor that's 20 years on, who is still thinking about growth, or they're actually looking at the at the end of the spectrum of, hey, I'm considering retiring at some point in time. Usually you'll see somebody like that, they're going to need to have one, maybe two support staff, one or two junior advisors to help them with their practice. And also, whether or not that are they training them? Are they taking time away from the marketing and their larger client base? So I think that those are the three main cycles that you run into. And it's just a matter of which one do you fit, and how does that affect what the overall value is of your practice.
I think that's super helpful. In terms of the resources, the structure, and the quote unquote platform that Secure Planning Group provides to advisors, can you maybe speak to kind of how our resources here assist advisors in each one of those phases maybe?
Sure. So there's two ways to join SPG or to partner with SPG. And we found that it's important to be able to create different options. The first option is an override structure, which is, I would say that most advisors experience that, whether they're a part of a corporate or a larger platform, they pay an override to the firm's doing their compliance, providing office space. If they provide the name, unless they go as a DBA. In that situation, we do provide a very competitive override at the firm. We have offices in Horsham, Pennsylvania, Exton, Pennsylvania, and a small office in Doylestown. In that situation too, we do have experienced advisors that spend most of their time in different areas that can help you expand your client base. For example, we have a divorce planning specialist, we have college planning specialists with financial aid backgrounds. We have a retirement plan division that really kind of lends itself to the employee education side of things that can, expand that opportunity for those advisors to go into the wealth management side. We do also insurance planning here, advanced planning, executive benefits. There's a lot of different areas that we have people that have the experience in that could be a great resource for an advisor here at the firm. Another way that we can help in doing the override structure is when we're able to leverage the SPG marketing and events to the client base, it's allowing the advisor to focus in on the client relationship. It's also taking all that administrative work of setting up an event, putting on those events, paying for those events, doing it as a company. I think that what we've been able to do is build a platform here for that solo practitioner, one, to make themselves and their practice look like it's part of a much bigger organization, because it will be. In addition to that, have other resources that maybe that advisor doesn't have the expertise in, and you can make sure that as a fiduciary, you're providing a collaborative environment to make sure your clients are getting the best type of advice for their situation.
Yeah, I mean, living firsthand in this structure as a newer advisor in that junior advisor role, I think the idea sharing, the best practices, the not having to be an expert in all areas is a huge benefit.
Right.
And having those subject matter experts in-house and going directly to them, having them partner with you on opportunities or cases, it just brings more value to the end client.
Right. Yeah, and it's just to add to that, I think it's really important to understand that depending upon, I know from my past experiences, a lot of times you feel like you're on an island out there. You don't have that collaborative type of an environment, and everybody's doing things differently. And what we're trying to do here is be a great resource to get everybody on the same page, focused in on providing great services to the clients, but also building the opportunity to increase your overall value in your practice in the long run.
Yeah, I think that's a great segue to the next question that I would have would be, a lot of advisors don't really think about this until it's kind of too late in the game, but like putting a valuation on their business and their practice. And as you're scaling the business, what ways do we kind of enhance the value of the business for those individual advisors when they join us?
So the second way to join SPG is more for the, I would say, the more experienced advisor, maybe in phase 2 or phase 3 of their careers. And in that scenario, what we wanted to try to do is build a way to be able to create a lot of leverage between advisors' practices to get the scale to attract, say, some of the different types of buyers that in the industry today. When you see somebody that's a smaller type of practice, they may be able to get if they're thinking about retiring, they're going to be in that 1 to 3 times multiple of their annual cash flow. In order for us to create leverage for our advisor base, what we wanted to try to do is build an equity-based model that is more focused on EBITDA and profitability of the firm. When you do it more on that, the ultimate goal there is to be able to focus in on what is the repeatable client experience, that cash flow number, and as you get larger AUMs involved, those multiples on EBITDA could range anywhere from 6 to 8 times and even as high as 10 to 16 times, which completely changes the environment of the firm. Part of that too is making sure that your clients also know that SPG has built in a succession plan for all of those advisors, whether they're part of the override structure or they're part of the enterprise value. The override structure advisors are going to slowly get their clients involved in the client experience. It will improve the valuations of the override structure advisors because of the fact that if their clients are used to and are engaged in what SPG brings to their client base, whether they're in the enterprise or override model, the fact is that those clients are a lot stickier, and we're willing to pay a premium to the override structure advisors for their business because of that experience, and it makes them, as I said, a little bit more stickier in the long term when there is a transition over.
Yeah, I think that makes a lot of sense, and even viewing it from my seat as a junior advisor, being a part of that ensemble model is I was able to go up market more immediately and work with higher net worth individuals. And when you think about the resources like a junior advisor like me can plug into, that's just as applicable to that phase 2 or phase 3 advisor, where your team that focuses on the retirement plan business, maybe an advisor in phase 2 or phase 3 has 2 or 3 retirement plan clients. Previously, they kind of serviced it as they could. Now they have all the resources to really dive deeper, build relationships with those employees, grow their book that way.
In addition to what you just said there, in the retirement plan side, the industry is changing so much. The regulations are changing, the requirements are changing, and there's no way that an advisor that only has 1 or 2 or 3 or even 5 plans are going to be able to keep up with what's coming with obviously the new Secure Act and things like that.
Yeah, and then all across the board, the different expertise or subject matter experts, so to speak. So like you'd mentioned it in previous recordings, having a divorce specialist in-house, having someone who's almost solely focused on those retirement plan or participant plan clients, and things like that. It's just being able to share best practices, best ideas on an ongoing basis. So like on a monthly basis, we have those meetings where we're all sitting in almost a think tank,
right,
and we're sharing, hey, what are you guys seeing? What are some outside the box situations that you're working on that we can talk through?
Right.
That collaborative nature, again, it brings value to the end client, but it also brings value to your business as the advisor because you're able to swim upstream, but also, like you're saying, the multiples alone when you're plugged into something like that.
Yeah, I mean, I do think it's important, and we're probably going ahead of ourselves, but for the advisors, as you're started getting into that second phase of your career, it's really important to understand what really makes up, the value of your practice, right? Part of that is an understanding where is the industry going. It's about whether it's brokerage or what percentage of your business is brokerage, what percentage of your business is advisory, what percentage is insurance business. You talked about retirement plan business. The demographic of your client base, whether you built a succession plan with your existing practice. You have the fact that you have the next generation of some of your clients. Are you connected with the next gen? Just trying to help advisors understand all of these factors that go into valuations. When these companies or new advisors that are thinking about buying your practice, it's really important for you to understand they're buying the revenue, the recurring revenue that comes into play. So if you have for example, demographic, if you have an older demographic client base, well, the odds are, sooner or later they're going to be going into distribution phase. And that kind of, for the people that are in phase two and maybe in their latter part of their careers and they're starting to make good money and they're running their business just like a cash flow business and they question whether or not they ever want to sell or retire. At a certain point in time, there's always you're going to run into a situation where you're not going out and finding new business to replace the clients that either passing away or depleting their accounts. And I think that's a mindset here that we're trying to make sure that we're building an environment that is going to maximize the profitability of the organization and make sure everybody's on the same page.
Yeah, and I know that because this is advisor facing, we're focused on a lot of like revenue generating and profitability, all that. But one thing to not get lost in translation is you're also providing a better experience for your clients, which clients are always the first priority. But ways that I see from the outside looking in as a junior advisor, Secure Planning Group support some of these more experienced advisors is cleaning up their process, giving them access to administrative staff and service staff members that are really good at what they do. They do great by our clients, but by nature make their process more effective and efficient as the advisor.
Yeah, I totally agree with you there. I mean, I think the key is, as you go up market, I know from myself and with my client base, I'm getting the questions, what does your succession look like? Mm-hmm. What's my experience going to be? God forbid you get hit by a bus, or God forbid, you're getting older. I'm getting some grays and stuff like that. 28 years in the business. Who's going to be taking over your book? And, because they want to make sure that their client experience is the same. They're building long-term plans for 10, 15, 20, 25 years out. And they want to make sure that they don't have to do this all over again. And I think that that's what we're trying to do here and build in the firm is build that repeatable client experience, whether you're a new advisor or your advisor on the third end of the spectrum, which is, you're considering retiring or you're already there. And you're looking at, how do I make sure my clients get put in the best possible position? Do they have the resources? Do they have the expertise? Are they being provided other information outside that's not just financial, to provide other educational information that can bring more value to the client situation?
Yeah, the value, and then also just like the amount of quote unquote business that's left on the table by most advisors because they don't feel comfortable servicing a specific component of this client situation, where they either previously had to outsource it to somebody outside of their office or team, or they just didn't feel comfortable talking about a specific topic. Right. Where you're never going to run into one of those scenarios when you're working with our team is chances are across the many years of experience across all the advisors, somebody's going to have firsthand experience with whatever client situation you're running into, but also making you feel more confident. Again, you mentioned it, swimming upstream, working with larger clients that ask different questions. They expect a different experience than those smaller clients.
I mean, that was a great statement there. I mean, we run into advisors all the time where maybe they don't do any insurance and they only do financial planning or investment management, and the insurance is left out there. And the difficulty there is, if you're providing a financial plan and you're acting as a fiduciary, how could you not be talking about risk management tools or insurance? I think that's a big issue. And we've built the environment here that we have people that will come in and make sure that your client's taken care of. We do see a lot of times advisors tend to hold their hands around somebody and never end up talking to them about, say, the retirement plan or the insurance. And then, as an advisor, you are leaving yourself open. As I said, as a fiduciary, that's a no-no. But the other side of it is if somebody does a better job than you and talks to your client about why they should be looking at all these different areas that you're not talking to them about, you're leaving that relationship out there. And to me, I think the insurance side, the 401k side's another one. The opportunities there to be able to have new wealth management opportunities come back to you when we provide that employee education there. I mean, they're missing out on a lot.
Yeah, and in that example, how many advisors have tons of business owner clients and don't even talk about 401k planning or participant plans? It's a great example. One of the other things that comes to mind, again, coming from the outside and joining the team over a year and a half ago, I was a wholesaler, and seeing the wholesaler relationships we have, the service level agreement, so to speak, from all these other providers that we partner with, you're just not getting that at a smaller scale.
Right.
Because Secure Planning Group is a better client for a lot of these service providers we work with, we get very hands-on support from those partners outside of our four walls, which as a solo practitioner, you're just not receiving that.
Yeah. I mean, look, we talked about upmarket. I mean, think about this, depending upon where you're coming from, you may be limited, let's say you're a wirehouse guy and you're limited to the investment options that a wirehouse platform would provide. Being a hybrid RIA platform with Wealth Care Advisory Partners, we have the ability to custody at Fidelity, Schwab, LPL, just to name a few. So I think as you go up market, you don't have to move the client's accounts over and change their experience or broker-dealer situation and cause possible additional fees to the client. If they're at Schwab but they want to work with you, you have the ability to do that. Now, you have to hit certain client advisory sizes in business to make sure that you have the freedom and flexibility to be able to do that. But as the larger clients are there, we want to make sure that we can sit at the same side of the table as the client, whether we explain this to them, whether the client likes Schwab or Fidelity or LPL. Our focus is sitting on the same side of the table as the client. Maybe let's just use LPL as an example. Maybe LPL doesn't have the investment options available to the client, but Fidelity does. Now we're able to actually bring those investments over to the client, and maybe it's at a lower cost. So we're helping the client understand that as their personal CFO, we have the ability to do all the due diligence for them to be able to try to find the best platform for their individual situation.
Yeah, and the firsthand experience with all those different service providers, it's going back to the example of someone in that phase one. You're forced to figure all that out for yourself. You plug into a firm like ours, we're going to align you with whoever the subject matter expert is in-house, and then they're already going to basically streamline whatever process that is for you as the advisor. So the end experience for the client is much better because it's not an advisor trying to figure out some type of new service or new product or provider. It's, hey, this is somebody we have a lot of experience with. We know they do a great job for that type of client.
Right.
What else do you think that we maybe missed or didn't touch on in terms of the different ways that our support structure supports those advisors?
No, I just think that, again, you can try to recreate this on your own. I mean, when you think about it, you got office space, you got to deal with the lights turning on, you got to deal with, the office manager, assistants, training them, worrying about the HR issues, benefits, things like that. Or you can partner with a group like us and focus in on what you enjoy doing. Look, there's some advisors that can handle this and do their own and manage the process themselves and still also market to new clients and grow their practices. And there's others that just want to focus in on being an advisor and going out and servicing clients and going out and finding new clients. If that's who you are, we're going to be a great fit for you, because at the end of the day, broker dealers are broker dealers. You end up, the longer you're in the business, you end up realizing that you're not getting as much value from them in the grand scheme of things. And if you're really looking to grow your practice and be part of an environment that are all like-minded people and are focused in on everybody growing, not just themselves, I think you really got to consider giving us a call.
Yeah, and I think that's a great place to leave it. Is if any of the topics that we touched on today are of interest to you as an advisor, you'd like to pick our brains more about what the experience would look like if you were considering joining a company like ours, we'd love to entertain any of those conversations. So feel free to reach out to John directly or reach out to us via our website. But we hope this content was helpful, and we appreciate you guys tuning in.
Yep, look forward to hearing from you.